Good morning and welcome back to Man and Machine, episode 137 here with the PeakBot team and Mark Phillips from Harvested Financial. Gentlemen, happy Monday. How we doing?
Doing good, and happy belated Father's Day to all the fathers that will watch this.
Yes.
It was a good weekend. It was a good weekend. Mark, how was your weekend?
It was good. I got Father's Day. I got to get up early. 5:30. I was hanging gutters. Went for a
Nice.
hike with my dad. I ate some barbecue after that. So it was feel like a 1-2-3 punch.
That's awesome, man. Productive, time spent, food consumed. What was on the barbecue?
It was a brisket.
Of course.
Oh, yeah, it was. Nice.
I didn't make it myself. I can't take credit for that.
Okay.
Okay.
So let me ask you, when you're, a grill guy like yourself, and that's like an insult, like you're past the grill, I think, but like a big barbecue guy like yourself, when somebody else is cooking a brisket, do you go into that meal excited because you didn't have to prepare it? Or are you like, I hope this is as good as mine would be? Like, where's the mindset going into that?
So I've never made a brisket myself, so
Oh, wow,
I don't
okay.
have my own like chops for that. But in general, I like having other people's cooking too,
Yeah.
right? Like I'm happy to be the chef, but I'm also happy to see something else, right?
All right, cool.
It's a win either way.
Happy to hear it. Yeah. I will tell you, Ben, really quick, what was the best thing you consumed over the weekend?
Let's see. At my parents', we had some good steaks, so that was can't go wrong with a nice fillet.
Can't beat it. Can't beat it. Love to hear it. Okay, so a lot we got going on here on today's show. Not a full week of trading. We have Juneteenth this week, so that will be market closed. So we'll get a little bit more into that and what's going on this week. We're going to be learning a little something, of course, with Mark and the team here. We're going to be talking about VIX and how adjusting VIX and when not to trade certain strategies, specifically our King Condor strategy, which has been, as we know, reigning supreme, I guess is the phrase we've coined here, and has been carrying the team on its back as of late and had a good week again last week. So we'll talk about that and more, and of course, stocks in real life. We're going to try to make a trade idea, not financial advice, out of today's stock. We'll see if it comes up. But guys, anything else I missed?
I don't think so.
I'll tell you something that wasn't missed. JJ Braun, is that his name? The guy who won the U.S. Open, 64-foot putt to secure the U.S. Open, which was pretty awesome. I think his name is Braun, right? JJ Braun. Sprawn. See, I thought something felt weird when I was saying it. But anyway, great weekend for golf as well. All right, let's get into it. Ben, we don't do PeakBot picks anymore. I just want to make sure, as we talk about King Condor, one trade last week, right? And a victorious one.
Winner.
So let me I think I can share the calendar really quick. I just want everybody to see how the bot has been performing. Of course, Mark is utilizing this strategy as well. So let me just put this on screen here. So here's a recap of last week, okay? And I wanted to show this before we get into the learn something a little bit later, but look how many times we didn't trade last week, okay? 4 out of 5 days, the criteria was not met, whether that was due to a rise in VIX, a gap in the market, or economic events, okay? So going great so far in June, and we had an even better May, okay? So trades just as much as it doesn't. All right, I needed to show that to the good people joining. Let's get on.
I've not seen that before, and that's awesome.
Oh, yeah, well, we got more talking to do. This is next gen. We're moving in.
These are our next gen bots.
What's that?
These are our next gen bots.
Next gen bots. Like, that's what we've coined it, Mark, right? Like these bots that kind of make decisions based on economic events and or market, conditions. So
single ticker.
Single ticker as well. Makes it easier to track the results for sure. I'm talking too much, guys. Somebody help.
All right, why don't we get into stocks in real life? Today we are going to be talking about GM. We make it, you love to drive it. So
Is that a new logo?
that is GM's logo. I don't know if it's new. Let's take a look.
I was gonna say, look, I'm not like trying to look for logos of companies, but I have not seen that GM logo before. I'm gonna get some better light.
That is the current logo. I'm gonna open this image up. I'm gonna share this. There we go. There's the timeline of GM's logos.
Oh wow. Okay, so I'm behind.
Yeah, so 2021 they made that update. They decided they did not like capital letters anymore and had to go to lowercase.
It's true. People.
Any guesses how many brands are within the GM umbrella?
I feel like we kind of talked. How did we end up talking about this last week?
You mean different like Chevrolet, Cadillac?
Yeah.
I'm gonna say 6, even though it's probably
double that. That was my original gut, and I'm like, there's easily twice as many. I don't know.
well because they definitely own ones that like we don't see day to day, like from other countries, I'm sure too.
I'll go with 9.
9.
Okay.
Dillon, what'd you say?
6.
6. So this is what I'm getting. We got Chevy, we've got Buick, we've got Cadillac, we've got GMC, which are the U.S. familiar brands. And we have Holden, we've got Veojan, I don't know if I'm pronouncing that correct,
No, you're definitely not.
Vauxhall, and Opel. And I have not seen
So that's 8.
I've not
Plus-
seen these brands.
It's kind of funny how just looking at it, you would assume Buick is internet and like another one that we haven't heard of just by the logos. But
You know, when you go to their website though, they're only showing.
By the way, Mark, you win really quick. I mean, if we're playing Price is Right rules, you win over, so you lose. But you were pretty damn close. Okay, what's this, Ben?
So this is their website. This is GM, our brands. They're only showcasing the 4 U.S. familiar brands.
Yeah, they got you cookied. They know where you are.
Yeah.
Okay, so let's talk about experiences with GM. Do we have anybody in any of the families who are driving any of these cars? I know my dad loves his Chevy Traverse, I think. I mean, it's like basically a minivan without being a minivan.
Fair
I
enough.
don't know if you guys are driving any of these.
I'm trying to think. I've never had any of these brands as a vehicle.
Mark?
The Chevrolet Celebrity was my childhood station wagon. So call it from like, I forget exactly what year it must have been, but 90, 91, like basically all through the 90s. Rocked. I wasn't rocking it. But the Chevrolet Celebrity.
Wow, I'm looking it up right now. Yeah. Do you have a color? Was it a hatchback, you said?
It was white. No, it was the station wagon.
Okay.
Yeah, like kind of like that one on the lower left there. We didn't have the wood paneling. That was a little bougie.
Oh, dude, looking at old cars is so trippy sometimes. I'll tell you, we were talking about this, I don't know when and where, but Buick being one of the companies that GM owns, we were talking about Buick had one of the comebacks of the century, it seems. They were, I feel like when I was growing up, laughed at as a car, like you didn't want to own a Buick, and now they're a luxury vehicle. They're not cheap. They're very nice looking, arguably better looking than some of the other luxury cars out there. So I think GM has at least pointed Buick in the right direction. All right, let's talk.
Things turned around for them when they brought Shaq onto their.
Look at him, dude. He's not messing around.
He looks comfortable in there. That's a spacious vehicle.
He can fit in that. Big man like Shaq.
Yeah, and then they had those great set of commercials where it was like, I talked about this already, but like, hey, I'm right outside. I'm in the Buick. Where? I don't see a Buick. And it was this beautiful luxury car.
If you're sitting behind Shaq here, I don't think you've got any room at all.
Yeah, there's no baby seat fitting back behind Shaq back there. But,
no. No shot.
Shaq lacrosse. Dude, Shaq doesn't stop. I wouldn't be surprised if he doesn't own a piece of GM. So let's talk about the stock then. Ben, I'm looking at my Tradier account right now. I don't know if you're doing the same. Have you ever traded GM? And then I want to know Mark's experience or inexperience with the stock as well.
I have not traded GM.
Okay. So Mark, ever traded GM?
Not like recently, not a lot, but this was a big product in 2010 when they were going through their bankruptcy and restructuring. So
Yes.
like in 09, 10, this was a very interesting name to trade. At my old market making shop, we specialize kind of in names that were going through bankruptcy with liquidity like scenarios that were somewhat unique. So this was a fun, active name to trade as it was going through bankruptcy. And then again, at relisting, right? Like, they basically went through Chapter 11. I forget all the corporate action specifics, but then they relisted as a brand new company that was like a totally new IPO in 2010. And that, a new IPO is always interesting too. So we had like 18 months of good trading in this name.
All right, so tell me, and I'm going to pull up the chart here, at least from their relaunch in end of 2010, it looks like here. But what types of trades were you putting? I mean, I'm not asking for the specifics. I'm just saying, what were you trying to do with this volatile stock in and out? And what was the game plan when you were approaching it, generally speaking?
Really, as a market maker, you're just trying to figure out what everyone else's game plan is and collect a little bit of edge and wear the risk of the position. So, things like bankruptcies where there's constantly new updated interpretations, where you have customers that might be putting on various different scenarios, whether they're speculating, whether they're hedging, whatever it might be. That tends to be, there tend to be a lot of like movement of inputs. So movement of forward interest rate, how quickly do we think this bankruptcy is going to happen? What do we think the vol path is going to be? In a bankruptcy, the skew can get kind of funky because, well, you might think, okay, this is gonna, totally get liquidated. Like there are also scenarios where upside calls really get bid, and the chance of something happening that takes them out of bankruptcy, something that would be a 500% volatility event might only be a couple dollars when stock's trading at $2. So it really creates a lot of interesting pricing dynamics because things aren't following the normal distribution of log normal returns. They're like very specific scenarios, especially if like prices have been announced, if there's been amount of cash on the books, like ends up being interesting strike prices where things will change. So like it's a particularly unique environment because a lot is focused on this one big event, and outcomes tend to be not distributed the same way as they would be in, what the next 30 days in Apple look like.
Right.
Mm-hmm.
I'll tell you this, looking at the chart here as of late, by the way, when we were back in like this rebrand here, so it looks like they, guess from TradingView's data, looks like November 1st in 2010, relaunched around $25 a share, declined there for about a year or two, and then it was chilling between $30 and $22 for quite a while. Huge spike here. I'm imagining this is COVID fueled, and then lost.
Yeah.
What's that?
That was that used car boom.
Oh yeah, for sure. And then they were trading at highs of around 60, I guess you can say. Lost pretty much half of that. And since the end of 2023, I guess we'll call it, we've been in a bullish trend. But more recently, it looks like as for 2025, if we go to the dailies, we're a little choppy here, but it is now bearish from the beginning of the year just a bit. You can kind of see maybe some type of pattern forming here, but
yeah.
trading right around. Go ahead.
So I'm looking at GM. It's not currently on the watch list, although it's popping in and out of the watch list, right?
Oh, okay.
Yeah. So for anybody that's been in tune with the updates to our watch list, we're severely limiting the amount of tickers that show on the watch list based on expected value. So GM pops in and out every now
For
and
trend
then.
spread.
For trend spread. Right now, I'm seeing, and I went back to our Google sheet, which has all of the raw data on it, so that way I can get some numbers. It looks like GM currently is showing a 50-cent spread. It's bullish, 50-cent spread for about 5 cents in premium. So that's a little low. I think once the market opens up, that's going to update, of course, that's going to change. We're going to, I think, be able to see a little bit more premium on that. The strike price, the sold strike for this bullish play would be $47. So, yeah, if we...
Yeah, I'll pull this back up.
I got it. If we were to look at the chart now, $47 would put us right around, just call it here.
And it bounced off of that this last week or the week before, actually.
Yep.
Yeah, that's not terrible, but there's just not a lot of premium in it.
Yeah, overall, again, we like to say the trend is our friend. It certainly looks like things are trending down. But again, what do lines on a chart really tell us? I don't know. Actually, Mark, I don't know if we've asked you this question before. What's your whole opinion / philosophy on charting, and what knowledge you can gain from doing that?
I think it's astrology, but I think that there are meaningful things that you can get out of it. I think
not like astrology?
What?
So then not like astrology?
Oh, actually, I mean, that's a different topic, but I think there are some truth nuggets in astrology too.
Okay, all right. Sorry.
But I think for the most part, it's indicative because there are enough people that are paying attention to it. That I think generally I view technical analysis as being part of sort of the weakest form of efficient market hypotheses, and that to the extent that like past prices incorporate or that the current price incorporates all the past price history, like that's exactly what you're seeing on the chart. So the idea that looking at the pattern in the chart is going to be predictive of where things might go in the future, I find that a little bit of a struggle. I'm certainly not drawing Fibonacci lines or anything like that. But that said, I know plenty of very successful traders that do stuff like that. Where I see there tending to be information is, I believe in like round number theory, that like 6,000 in SPX is a big number for people. I believe that people set strikes based on, round numbers, like partly because those are the strikes listed far out in advance if you're doing a long term strategy, but also because 5392 is a lot harder to remember than 5400. And so like, I think there's a lot to be said for that kind of dynamic. And sure, there's momentum and from breakouts over those levels. Like I believe those, exist. Whether they're necessarily tradable, I think is a little more gray to me.
Good.
I think you need a really. Sorry, go ahead, Ben.
I was going to say good insight. I agree too. That it's interesting to see, and there's strike prices, which these round numbers seem to be more heavily traded. Also times of day. Mark, I think you shared a chart with me one time where, I think it was you, maybe it wasn't, but where it showed like SPX contract volume throughout the course of the day, and like every half hour you saw like a smaller spike, but every hour you saw like a much larger spike in volume, just because of it's a round time.
Well, and I think that's when a lot of algos are getting in too, right?
Yeah, I actually wrote about this last week in my blog. So that's a cheap plug to check out the till.substack.com. And like a lot of the hypothesis is exactly what you said, right? Those are bots, those are algos that are firing off at 9:30, 10, whatever it might be. And they're making a systematic decision at that time. Whether it's looking at the overall market, whether it's automatically selling something. And that surge of volume, I think my conclusion is like, that's a good thing. That's going to drive pricing kind of more efficient to the extent that there's going to be more activity. Generally, people that are in the business of providing liquidity and making markets are going to want to be there tighter, competing for that order flow at those times. So whether there's something you could do about that. Not every pattern is necessarily actionable, even if you can observe it.
Yeah. I think one thing that really stuck out for me when you said this, Mark, was although it may not be yours or somebody else's primary, tool when trying to figure out when and when not to take a specific trade, what can't be ignored is how many people are using it, right? So when the masses are utilizing this, this technique and charting and looking for patterns, you have to consider utilizing that because everyone else is, at least generally speaking. So very cool. All right, Ben, I don't know about you guys. I don't know if there's a trade here. I love a 50-cent spread. I don't like a $5 premium. I
think I like a call spread on this.
Oh, okay. Talk to me.
Pre-market we're at $49. So right now I've got the $50 strike on screen here. Yeah. And we've bounced off of that round number there several times, and we haven't been above that round number really since January, it looks like. We popped up above it briefly in March, but then right back down. Not
true.
Sure that drop down here, but it seems like $50 is a bit of a struggle point. If we look longer term, it does look like we are trending down. Trend is our friend. Shorter term, from April, we are trending bullish, but it looks like we got a lot of consolidation around this $48, $49 price. And then again, bounced off of that $50 last week and coming right back down. We'd have to see a strong push through to convince me personally that this is a bullish play. But I think I would take the bear on this.
So if we sold the 50 call and say bought the 52 for this Friday, there's $25 in there.
Okay, $25. I bet you that changes when the market opens too.
Yeah. But I do like, if we're talking round numbers, I think between 40 and 57. Now I'm thinking Condor between 40 and 57, even more premium in there, but I'm not going to set that up right now. But I'm going to keep it in mind. But I'm not going to keep Comwell, Condor, not. At least yet. So
we've got King Condor to do that for us.
Yeah, exactly. I think we spent enough time on GM. If we see it populate in the trend spread watch list, I'm going to keep an eye on that. After the show, when the market opens, I will look at that $3 Condor there, see what it's paying between 47 and 50. But keep a close eye. Let's get into learning a little something. This is some good stuff. And again, for some context, Ben and Mark primarily have been breaking down how we've gone about building our King Condor strategy. And this week specifically, they're breaking down the VIX. I'll hand it over to you guys.
Cool. Right. We are going to be breaking down the VIX, and this is going to take a couple of weeks because there's several ways that we are using VIX. Today, we're going to be looking specifically at overnight VIX movements and how that impacts the decision-making of the bot. So again, this is the King Condor base here. All of the statistics, the equity curve, the returns per year. I will zoom into that when we get into our comparisons. But roughly the numbers to keep in mind, roughly 25,000 P&L, roughly 53% compound annual growth rate, and roughly a 6.7% drawdown. Now, we're going to analyze 3 different scenarios, and Mark, I'll hand it over to you in just a second. But what does an overnight VIX move down do? What does us allowing not just to move down, but also a small move up, what does that do to the strategy? And that's actually where the strategy is right now. The strategy does allow a small move up in VIX. And then allowing a big move up, how is that going to impact the strategy? So Mark, I'll zoom in here a little bit. Maybe we can just give a brief flyover of how, in general, do these different scenarios affect positions?
Yeah, this is a great topic of conversation today, like especially obviously looking at some of the King Condor results, but even to your point, Ben, about sort of the systematic timing of many of these strategies, just because you're looking at the market automatically every day at 10 a.m. or 10:30 or 10:15 or whatever round number, what you do at that time is very critical. And I think the biggest improvement in the second generation bots has been the contextualization of the general market environment. And when you're trading options, none of those is really more important than what the actual VIX is doing. So quick recap, the VIX is an implied volatility index that's based on a strip of options in the S&P 500 that are expiring at 30 days. So the VIX itself, not actually tradable. It's just a complicated calculation, weighting all the volatilities, along the S&P 500 implied vol curve at a theoretical 30 days. Notably, it doesn't just include the at the money vol. So if you're looking at the 50 delta option or the one closest to spot, the VIX is always going to be a little higher because it includes that strip. And by strip, I mean it also gets the downside puts, it gets the upside calls. So we can see movement in the VIX that might not even necessarily be at the money movement in vol. It might be skew movement also. So really it's an incredible indicator. We can talk all day about why the VIX is awesome. But it provides like a very simple way to say, what is the market feeling? What's the temperature? What's the barometer for, or fear gauge for the market, as CNBC loves to call it. So looking at what the VIX has done overnight, tons of action is happening in these overnight sessions. So we actually get really good pricing out of what happens overnight, whether it's ES futures, whether it's the global trading hours that SPX and VIX now have. Like, liquidity is pretty rich out there, and you actually do get good pricing. So for our strategies that mostly focus on intraday, being able to have this kind of last 18-hour contextualization of the news cycle is pretty powerful. So in scenarios where we see that the VIX has moved down, that obviously means that that the price of options is going down. Generally, that correlates with the market going up. I think there's something like a 90% correlation, spot vol correlation typically, market up, VIX down, vice versa. So with VIX going down, that generally is a deflating of tension, of pressure. Although ironically, probably not today. But that's a different question. And so seeing that go down, that's generally, I think, a positive indicator for a scenario where we want to be selling condors, selling options. Of course, the implied vol falling means the price of these will go down. But in a lot of ways, we're not necessarily trading implied volatility so much as like gamma pricing on like a very short contract. So, VIX down is going to cheapen the options a little bit. But remember, we're trading 0 DTEs or 1 DTE compared to the VIX, which is at 30 days. So it's not a direct relationship between the price that you trade so much as a general market barometer, like I said. So it moved down, de-escalation, a stable or rallying markets is indicated here. So that tends to be, to me, VIX falling means more certainty, means I have more confidence in putting on my position. So we see that, great, green light, assuming all the other sort of indicators are falling in place, that's a pretty strong filter for what's, for a good opportunity to place a king condor. To the extent that the VIX does move small up, that's actually kind of why I got into the nuances of what the VIX is actually calculating. A small positive day in the VIX doesn't necessarily mean that, there's panic and going to be blood red everywhere. That can come from adjustments in skew. There can be weekend effects that'll cause the VIX to move up. So just the fact that the VIX is ticking up slightly positively doesn't necessarily mean that this is, the uncertainty, more slippery movement likely. It might be from some of these quirks that I mentioned, or it could just be a small down day, right? Like the market goes down just as many days as it goes up, or slightly fewer usually, but you can still have a winning trade just if the indices are down. So we don't necessarily want to exclude the small move ups because they can also be profitable, risk-adjusted trading opportunities. Before I get into large move, actually, Ben, I want to double check with you. What exactly is the threshold that we're using there between the two?
So for what we're calling a small move up, specifically for king condors, we're saying if the close of VIX yesterday is 40 cents greater than the open today, so a 40 cent bump, 46 less than So 40-cent bump up, anything above 45 cents. So 45 cents is the threshold that we're using right now. And, debatable on if there's really a difference between 45 or 50 or even a dollar move, but 45 at least seemed to be what was optimized based on the back tests that we've done.
Yep, and I think to emphasize a point you made there, the fact that there's not that much of a difference between any of those indicates sort of the robustness of this strategy, right? Like if it was 45 cents as a winner and 50's not, that's a pretty fragile kind of test. So generally just allowing that little bit, I think allows for some of the quirks, allows for a small down day to still be a good entry point. All the way on the right, though, of course, when we see that big move up, that's definitely an indication that, hey, order flow is indicating that vol is in for a repricing, whether that's downside skew, whether that's absolute levels of volatility. To the extent that the VIX is moving or implied vol is moving more than usual, that's a time where, for a strategy that's, going to get short, that's going to capture sort of that, 1 day premium decay, you don't want to step in front of that. And what we're looking for in this Condor strategy is something that is going to take the opportunities that seem to make sense and leave the ones by the side. I generally believe that options are very well priced on average. So you need to put a filter in for when those are going to be better short opportunities. If you want to flip that around, does a large move up necessarily mean you want to buy? In the right scenarios, but at least for a strategy where we're targeting that short-term decay, a big move up is something that says, no matter how much more premium you're going to pay me, it's probably not worth the potential of the moves and the repricing uncertainty that's happening as, volatility pricing is changing.
Awesome. Cool. Well, Mark, thanks for that overview, and we're going to take a look at how this impacts the overall results of the back test for the King Condor strategy. And you will notice, and Mark, you commented on it, that speaking to the robustness of the strategy, that slight changes in this indicator in particular do not impact the overall results too much, which again speaks to the robustness of the strategy. So for our first comparison, as we stated, we do allow a small move up. So here are our numbers on that small move, messing up here. On that small move up, we've got $25.6 thousand in profit, 53.3% compound annual growth rate, 6.7% max drawdown. Now, if we said we only want to trade when there's a move down on VIX, right? We are going to give up some upside there because when VIX goes up, theoretically, the premiums that we're going to be able to earn go up along with it. The overall equity curve doesn't look much different. You can kind of see the comparison here, maybe a tiny bit choppier if we're only trading on the move down. What does get impacted is the P&L. So we went from $25.6 thousand in profit to just $18,000 in profit over 3 years. Still a great compound annual growth rate. Nobody's complaining about that CAGR. And then drawdown of 7.4%. So again, still a sound strategy, but we're trading less and we're not picking up as much in profit. So at least to me, I'm still sticking with allowing a small move up. Now, when we remove any sort of VIX restrictions and say, hey, VIX could gap up 5% overnight, we don't care, we're going to trade it anyway. Here's what that looks like. And again, still a pretty decent looking curve, a lot more trades than the King Condor is taking right now, but less P&L. The P&L still drops by about 20%, from $25,000.6 to $20,000 in P&L. Again, still a great compound annual growth rate, a little bit higher of a max drawdown, and we would kind of expect that when we're trading in times of higher volatility, when we see volatility increasing, right? That's not the most beneficial market for an iron condor strategy. So overall, like, it's really not that much. I mean, you can tell in the win percentages too. Like, these are per leg win percentages. Like, allowing a small move up is at 77.7% win. The allowing any move is 74.9%. Only allowing a move down actually increases our win percentage to 78.1, but we'll see that it it increases the average loser by doing this. So the average loser 372 there. The average loser here is 376. Not by much. And again, right, speaking to the robustness of the strategy. We could tweak this however we want, but we found that where we set the bot to allow a small move up on VIX turned out to just produce the best backtest results. And we're seeing those results live, trading it right now coming through. So the conclusion here is we want to allow a small move up. We want to benefit from those days where, yes, VIX has increased, volatility has increased slightly. We can get maybe some better premium on our trade, make a few extra bucks. We don't want to cut ourselves short, while also keeping ourselves safe and trying to avoid those blow up days when VIX shoots up tremendously.
I will say my general philosophy is that while it feels like implied volatility is getting richer and you're collecting a bigger credit on your spread, like those pennies almost never make up for the risk of movement there. And so just personally, I tend to keep a short leash on something like that because yes, volatility is very good at repricing, but or at being fairly accurate, but the lucre of those pennies is nowhere near worth the management and cost of capturing them, I think, from most retail strategies.
Yeah, usually the pennies aren't worth it for many strategies.
I'll tell you this. I was looking at some pennies on GM while you guys were cooking this up. I was trying to see if I can find a Condor trade that I liked on GM. And I just want to show you guys what we got here. And then we can look at some economic events and get out of here. But incredibly helpful. And again, before I even get into the trade, I want to show the results again for King Condor and where you can go to find this. So if you head on over to pkbt.app/KC results, you're going to find this trade log here, as well as, okay, with every trade back tested back into 2022, okay, as well as live trades being entered here since the team has been trading it. Again, so here's May, okay? So this is the King Condor 1DTE SPX only bot in May, all right? These are the results based on trading one contract. And as we've educated on this show before, it's a $10 spread. So you do the math on what the ROI here is, okay? We're intentionally not showing you so you don't freak out. But look, on a $10 spread, trading one contract, this bot made over $1,600 in May alone, okay? Hot month, and it did not trade just as much as it did trade. Next gen strategy criteria is built in on whether or not to trade it, as we've been discussing on this show. And here's June. All right, so 2 for 3 in the first week, netting $90, and 1 for 1 last week, making $330, putting the monthly total at $420 per contract, okay? So again, pkbt.app/KC results for that. Here is what I've mapped, okay? So these inner ones, $50 and $47, that's paying, again, this is pre-market, and since we're opening up, I'm sure the premiums will shift. We know the premiums will shift. But there's $30 in this right here, okay? Now, what I did on Tradier, and I'll show this, I moved the strikes out to these blue lines where, I hate to say it, like this feels very safe for me, 46.5 and 51. So I've got that on here, okay, with only $1 of exposure on either side. So a $1 spread, selling 51, buying 52, and then selling 46.5, buying 45.5. I mean, the mid is 16. again, if we were to switch this back down to 50, 51, and then those first lines that we talked about, taking into consideration some round numbers, now we're talking, Ben, I know you like to find 20% ROI on your trade if you're going to do one weekly like this, the directional trade. We're there. Again, who knows what happens when we open in 19 minutes. But I'll tell you what, if this scenario right here, 51.46, this morning at any point is paying me more than like $20, $25, and maybe that's possible. I think I'm going to take that manual entry, honestly, because I do think we'll stay within that zone. The technicals, not that we're going to obsess over it, but we're seeing a stronger buy signal than a sell signal over the next week. But anyway, I just want to show people that. That's how I was going about thinking about this trade. And we'll see if I take it. If we do, I'll post about it.
Cool.
Anything throwing us off this week from an economic standpoint? Reasons King Condor would not trade this week.
We've got a lot going on this week.
Okay.
So today, not too much, right? We've got a 20-year bond auction, which is why Max's 0DTE bot will not be on 0DTE orb. But other than that, nothing really. Tomorrow starts FOMC. We've got a bunch of other data coming out throughout the course of the day. Looks like the majority is pre-market on a bunch of retail data. On Wednesday is the big FOMC day, and we've got building and houses and oil data. We've got some auctions. So very, very busy day on Wednesday. Of course, we got the Fed conference. And then Thursday, we're off, Juneteenth. So we're going from super hectic day on Wednesday. What is Jay Powell going to say? And then moving into, hey, no trading on Thursday. So I'm definitely not going to want to take any trades moving from Wednesday into Friday, especially considering coming off of FOMC and the market being closed for a full day. And then on Friday, nothing. Friday, we're looking pretty clean. So hopefully end the week off with another King Condor entry. We'll see.
It's always curious when there's like a midweek holiday. I mean, for the most part, like modeling out, an extra day on the weekend or whatnot is relatively, that happens pretty often. I think the market's pretty good at that. But whether it's like that Friday after Thanksgiving or, Juneteenth has to be on June 19th, right? So that's going to create midweek blips. It's always curious to see how pricing happens there. And I think that's, just structurally one of those cases where I couldn't agree more with you, Ben. Like, it's just dicier than average. Why put it out there if you don't have to?
Yep.
Excellent. So a lot going on. We learned a little bit more about the King Condor strategy. We've seen the results. We're feeling the results. Again, I posted this about maybe 10 days ago. My 2 active PeakBot accounts are up over 24% in the last 2 months, mostly on the back of King Condor. I'm up over $5,800 there. So that's been a lot of fun. That's available either on PeakBot Pro, or if you really want the pros to step in here, you're going to let Mark manage that for you. Okay. Professionally managed portfolio. Information's down below. PeakBot.com/harvested. I'm not just saying this. That's the best option you're going to have. No offense to you, listener, viewer. Mark's a pro. He's a licensed professional, does this, and he's got some great strategies behind him, as well as man and machine. Knows when to come in and intervene. So PeakBot.com/harvested. You can open up a professionally managed portfolio with PeakBot's automated strategies and custom strategies built just for Mark, with Mark. $10,000 fully automated for you. PeakBot.com/harvested. Okay.
Cool.
I think we're good to go. We got the market open in 15 minutes. Best of luck to everybody. If you're interested in getting started, just let us know what questions you have. Head on over to our website. We will be live again Friday. Okay. I'm getting the let's get out of here music. We'll be live Friday at 11:55 a.m. Eastern with the automation state, taking a deeper dive into our personal automated portfolios and much more. Thank you so much. And as always, we'll see you at the peak. Thanks so much. See everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.